Thank you so much, Denver, for that. So for our session today, the role of finance in achieving the 2030 Agenda for Sustainable Development, I'd like to share with you some background information about the session and what we're looking to achieve. So the 2030 Agenda for Sustainable Development is an ambitious and a comprehensive framework for global sustainable development, including the Sustainable Development Goals. It commits countries around the world to take urgent and collective action to end poverty, protect the environment, and ensure prosperity for all over the next 15 years. However, the achievement of these goals is heavily dependent on adequate resources, particularly financial resources, to fuel the necessary investments. In Africa alone, the continent faces an estimated $680 billion annual infrastructure gap and $100 billion annual as well finance gap to achieve the 2030 agenda. While there is clearly an urgent need for greater financing, the question persists on how to best mobilize the immense resources that we need. This panel discussion seeks to explore the financial resources and instruments required for achieving the SDGs in Africa and the Middle East. Panelists will discuss the current financing landscape and consider innovative resources and approaches for mobilizing capital, and discuss how authorities and practitioners alike can make best use of new approaches available to accelerate and realize the SDGs in Africa and the Middle East. Without further ado, I would like to invite our speakers to the panel to join us. So Dr. John Steytler, Project Leader, SDG Initiative at GIZ in Namibia. Ms. Punki Modise, Chief Strategy and Sustainability Officer at Absa Group. Ms. Sesilia Nkoshi, Senior Underwriter from NamibRe. And Ms. Naomi, Munyi, Group Chief Financial Officer at ICEA. Welcome. So thank you so much for joining us today for this panel and for sharing your very valuable insights with us. We look forward to the discussion. With our first question, I would like to share with you, John. So what opportunities in mobilizing finance for sustainable development in Africa do you see, and how can these opportunities be seized?
Thank you for the question. I would not like to go to some of the obvious opportunities, since this is a climate type of conference. What I practice normally is to say, let's go back to the basics. And when it goes back to the basics, it goes back to basic macroeconomics. So the first opportunity that I see in Africa is that savings rates are extremely low. And we have to find a way to increase our savings rates. It's only by increasing our domestic savings that we will be able to actually increase domestic resource mobilization. Second opportunity that I see, it's also not linked necessarily to financing, is that we have to create confidence in our local institutions. We have to create confidence in our revenue collection authorities so that loopholes are being closed. There's so much revenue that is out there, but it's not collected and it's not put to good use. So even before we go to all these nice opportunities that are out there, that in my view, I call them sometimes financial engineering. We have to look at the local opportunities. We have to look at the local tax that's not being collected. And also we have to ask ourselves the question is, why is it then that people are trying not to pay taxes? I recall somebody in one African country, a professor told me once, and very proudly, he said, John, you know, I've never paid tax in my life. I said, my goodness. So if you look at a tax, tax collection, it's very low. And we have to actually find a way to create that confidence, to increase, give confidence to our citizens to give to the tax collector what is due to the tax collector. And in return, the tax collector and the fiscus must also give the assurance then that money is put to good use. In Namibia, we have maybe a bit of, it's an anomaly, but I think it's something that should be showcased. We have one of the highest domestic savings rates when it comes to contractual savings. If you look at contractual savings, here I speak of pension, insurance savings. If you add everything up, it's actually almost in excess of GDP. And that's by far the highest in relative terms in Africa. And it's also one of the highest in the world. I believe it's only Netherlands that is having a higher rate in relative terms compared to a country like Namibia. It's a very tiny country. But now the question is, how do we put those savings to good use? We are having those savings that have been amassed over time, and at the same time we are looking now for other opportunities, whereas we're already sitting on a lot of savings that are looking for an investment outlet. So I think we have to come back, in my view, before we explore all these new terms, we have to come back to the basics of macroeconomics. We need to have confidence, because despite all the opportunities that are out there and the funds that are out there, what has happened over the past 3-4 years or 10 years? You just see governments are just going increasingly into debt, and the limits are being pushed increasingly. So we have to also look at our expenditure, and we have to look at, do we get value for that money before we just raise more and more money? Because the money is already, somebody told me once, took out a Namibia dollar and say, the money is already printed, you must just go and get it. It's there, you must just go and get it. But what's fundamentally more important is not just to get the money, is how to account for it and to create that confidence. And for me, I see that as the biggest opportunity, is how do we create that confidence? How do we bring trust back to the people of Namibia, to the people of Africa, that money that has been raised will be put to good use. And the trust levels is actually low in governments, but also private sector is also not trusted. Because during COVID, we have also seen that private sector institutions, they came up with so-called solutions to assist business owners, but that actually pushed business owners more into debt. So we have to bring trust back. Thank you.
Thank you so much, John, for this. And I think this also touches on the social aspect as well of things. And it's very important to have the trust, as you were mentioning, and localizing the efforts and the work that is being done so that we can even advance further and maximize and expand on the available opportunities on a national level, but also on a regional level. Now, speaking of that work, Punki, I would like to ask you, how can we incentivize the financial institutions to prioritize the sustainable investment in the region, and what factors do they consider in making the investment decisions in order to move forward?
Yeah, thanks a lot. That's a brilliant question that you've just asked. So my sense, to build on your first question first, is that if you look at Africa and the opportunities that Africa has, there's really 3 key opportunities that I see in Africa. Firstly is, I think, the mere fact that we've got a young population, is a big upside for the continent. And then secondly is the biggest opportunity that we have is that we are endowed with mineral resources. Lots of studies indicate that we've got about 30 to 40% of the mineral resources that are required to support a just transition, particularly from an energy point of view in the continent. So that affords us an opportunity to start thinking differently around, beneficiation, especially because we've learned significantly, I think, from some of our past mistakes. And then I think finally, the other element just to raise is the issue of the weather. I think in Africa, we've got the most beautiful weather, which offers us significant opportunities, in this transition, in the sense that if you look at, renewable energy, we can be a big provider, I think, of renewable energy at also a reasonable cost, I think, for the continent. But if you look at, within that, there's obviously challenges that we need to overcome. When you look at financial institutions, I think financial institutions to a greater extent then understand the role that they play in terms of, supporting the transition. So if I look at the work that we are doing within Absa, there's significant amount of money that we are putting to support the transition. Case in point, we've put out a target to reach 100 billion by 2025 in sustainable financing. But also at the same time, my sense is that, from an incentivization point of view, I think governments can play a significant role in incentivizing, by providing maybe tax schemes and subsidies, I think, for sustainable investments. At the same time, I think if we can establish clear as well as a consistent regulatory framework that to a greater extent encourages sustainable finance practices that can provide clear certainty and guidance, I think, to institutions, financial institutions in particular, a lot of value can be unlocked. Case in point, if I look at South Africa and what they've done around renewables recently, given some of the electricity challenges that they are facing, they've unlocked a significant amount of regulation, and we see from our side the amount then of support that we're able to provide to our clients in a short space of time to help them to transition. I think the other piece I wanted to touch on maybe is the, creating public and private partnerships. I think earlier on, some of the speakers spoke a lot about collaboration. Without collaboration, we're not going to succeed in this transition. And also as banks, we are here and we want to play our part in terms of collaborating to ensure that, our capital can be leveraged ultimately in the right way. And then I think lastly, it's just about increasing awareness. My sense is the more that gets done, whether be it by government or, by individual entities in terms of just increasing awareness and, educating people around the benefits of sustainable investments can help financial institutions as well to understand the long term and the positive role that they can play towards this transition. So those would be my points. Thanks a lot, Nur.
Thank you so much, Punki. This is very comprehensive, and I do agree with you. Collaboration seems to be a very recurring theme across the regional roundtable, as we can see. And of course, in order to collaborate, we have to understand how we collaborate, and capacity building would then, in that case, play a very important role. And given that you touched on the point that the majority of, that we have a huge youth population, I think this is an excellent opportunity that when capacity building starts at a young age, we ensure that the future generations are already equipped as we move ahead. And Africa is indeed rich in a lot of resources that we need to capitalize on, so I do agree with you as well, and thank you so much for that. And now that we've discussed that, also, Punki, you touched on a point on the challenges. So when it comes to the challenges, Naomi, if I can ask you, what are the potential risks and limitations associated with financing the SDGs? And how can insurers mitigate these risks and ensure sustainable outcomes?
Thank you very much, Nuran, and thank you. Allow me to appreciate the organizers of this important forum, and it's a privilege for me to be here. I think there are so many challenges as far as driving sustainable finance to meet this agenda, because first, not many people understand the whole sustainable agenda. And my colleague had just said that actually we need to educate the community. And the source of finance is mainly from either sovereign governments or from private partnerships. And the whole area of financing, most, especially from the private sector, most of the financiers will be looking at what's the return for me, what's the impact for me, and therefore I see a challenge in the financing risk itself. What kind of return do I expect to make? Is this project viable? Is it not viable? Most of the projects will be long-term. You'll not expect to see returns almost immediately. So therefore, it's very, very, very important for whoever is financing these projects to have a very clear understanding of these projects, to do a very clear kind of assessment, to do very good due diligence, so that then you are sure that this project you are going to finance is going to have some impact and there will be a return on investment. We've seen so many projects that have been started and they don't materialize, and therefore they become white elephants. Therefore, it's very, very important. That's a huge risk. You can put money and there is no return. Number two, I also see risk in terms of from a regulatory or policy environment. Most of, especially the private sector, we are regulated. There are certain ratios we need to meet, and financing, sustainability, where you may not see a return almost immediately. There is the risk that you may not meet some of these ratios. In the insurance industry, for example, we have a minimum expense ratio that we must meet. So if you are going to put a lot of your money in projects that are not going to give you a return immediately, then you have a regulatory issue in that the return or your issues are not what is expected to have. Number three, we have very project-specific risks. Most of sustainable projects, they are not the standard kind of projects we are used to in a business environment, where you know this is what I'll do, this is what I need to do, these are mitigations, and therefore this is the return I expect to get. So you may pick a project, and then because of so many stakeholder interests, that project may not materialize in what you expected to do. So there could be very project-specific risks. We've seen situations, especially in Kenya, where we have either renewable energy projects where stakeholders become a problem. Where that project is, it's probably somebody's land, so the process of buying that, the stakeholders are protesting. Therefore, that risk of the project itself can be there. We also see a capacity issue. ESG actually is not an area where you find skills readily available. So the people who really understand the whole of this space are very few, and therefore the skills we need to continuously develop. At ICEA Lion, actually, we have had to recruit specific capacity in the space of ESG. How many employers really are willing to put money into that? Because you have so many other areas you could actually put your money. The shareholders are looking for a return. So there's that risk of lack of capacity. And for me, the final one is the risk of even getting the appropriate investment opportunity. Yesterday, we talked a lot about the monies that are out there that are chasing projects, but we have not found the appropriate project. Therefore, there is also that risk that you may actually not find an appropriate project to invest in.
Yeah, absolutely. Thank you so much, Naomi, on that. And in terms of capacity as well, it's so not just capacity building as in terms of just having trainings and all of these things, but it's also finding the talent that would be working in support. And I think this is one of the challenges that we face also in the finance industry, is that sometimes you find it that it's either a financier or sometimes it's an environmentalist, and we constantly need a mix of both in all of these areas. And I think there are so many points that you touched on the regulatory aspects and all of that. So thank you so much for this. And Sesilia, I would come to ask you, as an underwriter, How do you view reinsurance underwriting using the SDGs as a sustainability lens? And what factors come into play here?
Well, thank you so much. I'm going to lean towards to my counterpart here. When it comes to reinsurance, I think for us the most thing we look at is our profitability of a risk. But to maybe gear SDGs towards that, we have to expand our bottom line. You now need to look at the impact that the risk has on the planet, it has on the people, and then you can decide the profitability. And again, underwriting, then you can bring in to say that you have a chance to create innovative risk solutions. And again, to maybe come to her is saying that, it is capacity intense or capital intense for you to create these products. So underwriting has a chance to maybe, say, team up with governments to create solutions that are social effective, that are environmental effective. So it plays such an important role when it comes to sustainable development. Thank you.
Thank you so much, Sesilia, for that. And Punki, also, I'd like to come back to you and ask what initiatives or frameworks, in your opinion, are helping the private sector towards the achievement of the SDGs, whether global or regional or something?
Yeah, no, thanks a lot. So my sense is that there's a lot of frameworks, out there that are helping, in particular, the private sector, towards the achievement of, the SDGs. I think if I look at the Africa Continental Free Trade Agreement, I think this agreement, to a greater extent, aims to boost intra-regional trade and economic integration within the continent. And then within that, you find that it creates opportunities for private sector development and investment across the continent. And then secondly, if I look at the UN Global Compact, I think this initiative, to a greater extent, encourages businesses to adopt sustainable and socially responsible practices, which are aligned, and I think they're forcing the alignment of operations, to the principles of the Sustainability Development Goals. And if I look at, Absa as an example again, we are quite clear as an organization that we want to be an active force for good in everything that we do. And that then forces us to really think hard and fast about, economic development in the continent. And we're clear then that, our purpose should largely talk to, how we empower the continent to achieve, I think, its requirements. At the same time, I think there's the Sustainable Development Investment Partnership. And this platform brings together public and private sector actors to mobilize also investments towards sustainable development. And then over and above that, there's development agencies, which also, play a core part in, social development aspects. So my sense is there's quite a number of, entities and initiatives out there which are supporting significantly, sustainable financing, which, have as an underpin sustainable development goals. And I think all of us, we're working towards ensuring that come 2030, we can raise our hands and say we have played our part, in shifting the overall environment to a much more sustainable space. Thanks.
Yeah, if I may have a quick follow-up on that. So sometimes people would argue that the more frameworks there are, the more overwhelmed they become. But I see that the more frameworks they are actually provides an opportunity to have a framework that addresses different areas of the process of the work that we're doing, but also they all have a common factor in the end. If you would like to comment on that, I know it was it.
Yeah, I think ultimately, obviously the common factor, is socio-economic development. And my sense is that the more the merrier, if I were to put it like that. So yes, all of them, I think, have got requirements in one way or the other, but I think if they are directed towards the right initiatives, ultimately, we'll see the right outcomes, for the greater good, I think, of the continent.
Perfect. So Sesilia, what more can be done when working with clients to ensure that they are keeping sustainable development and climate change at the forefront of their minds? And are clients doing enough in your views?
Thank you. I think, again, it was mentioned that collaboration should be the key factor. And then we need to create awareness and education as well. So with the clients that I deal with, where reinsurance is sitting in the supply chain, we have an inherent exposure because we write business that already has been written to insured. So the idea is to collaborate with the insurance company or the retail insurance company to create products that actually speak to sustainable development, not only to profitable business, but to also address the issue of climate resilience. So we need to hold hands more. We need to sit together. It was discussed also yesterday that if we cannot collaborate, we want to work in silos. And working in silos, we have conflicting priorities. We have conflicting objectives. At the end of the day, we're not going to achieve what we want to achieve, which ultimately is the SDGs.
Thank you so much. I think that kind of covers both sides of the coin, so that you're availing the products, but you're also working on the capacity at the same time. So it's kind of works both simultaneously. Thank you so much for that. And Naomi, so ICEA Lion has been a key player in promoting sustainability initiatives through insurance. However, with a low penetration rate in the region for the most vulnerable, how can insurers make the biggest impact or increase their impact?
Allow me to start by saying that ICEA is in 4 spaces. We are in insurance, we are in pension, we are in investments, and we also are in trust business. So when you look at our model, we are long-term in nature. If you look at our history, it starts far, and we are looking at going far into the future. So our model of business is actually very, very aligned with sustainable goals. In addition, we actually had champions who took this and ran with it, and my CEO was here yesterday, Philip Koyit, who is also a director in UNEP FI. They played a very significant role in ICEA getting into this space, and she's been our champion, and we wish her the best now in FSD. So in line with that, I think ICEA is very well positioned to support this. But we are in an industry, and I agree with you, whose penetration is very, very, very little. If you look at Kenya, for example, at one point, we had a 3% penetration. It has now shrunk to 2.4, meaning that the economy has even grown faster than ourselves. But we are not giving up, because I think we still have a very significant role as insurers to build the capacity for the rest of the industry to thrive. We also support our insurers, because without us, there will be no insurers. And I'm granted to hear Sesilia say that they need to work with us very, very closely to build products that can align to sustainable goals. And therefore, for me, one of the things we need to do, and we need to do this in partnership again, and partnership, is to kind of simplify our products. Most of the people, including our audience here, will know what a real insurance product is when you have a claim. Because that's when we will point you to the small print at the back and tell you all these conditionalities which you really never got to understand. So therefore, the insuring public does not look at insurance as actually a priority. The way you look at banking as a priority, we tell ourselves we are a very distant cousin to the banking sector. People think that insurance is for the rich, and therefore if you are not rich, therefore you don't need insurance. But insurance is needed by everybody. So we actually need to develop products that can be embedded into other services, so that then our insuring public can see the benefit. And for sure, we need to work with the reinsurers, because if we develop it on ourselves and the reinsurer does not support it, then we don't have actually that reinsurance cover. We need to partner with the insuring public, because at times we develop products that we think the public needs, and when we deliver them to them, then that's not what they want. So we actually need to partner with the insuring public. We also want to partner with our government, because it's very important. Some products actually need some level of subsidy from the government, especially the microfinance type of insurance products. They need support from the government. For example, ICEA, and Philip didn't mention it yesterday, is working with the government to ensure our pastoral communities, whose only source of livelihood is cows, and they cannot even afford the insurance. So we are working with the government, where we've developed a product where we are leading, but we're also partnering with other insurance companies in our industry. We are a team of 5. We lead, and we have our insurer in the program, because we need that kind of partnership. So it's very important for us to kind of listen to the insurance public, understand what is it they require, what is relevant to them, because the minute you go to talk about a fire policy to a pastoral community, for them it does not make sense, but you must talk about the things that they value. I think the last item I want to mention is that we must find a delivery style that is cheap. If you are going to deliver microfinance products in the traditional insurance style, where you have an agent and the agent goes and sells to this person, it will never make economic sense. It will be too expensive. We must find delivery channels that reach the end consumer easily. Technology is coming there to help a lot. Now we are partners, like in Kenya, we have Safaricom and the M-Pesa product. These Kenyans, almost 80% of Kenyans use M-Pesa, whether you are poor or rich. So we must find the products that can then be delivered through that kind of channel. We must partner with our banking sector, because the banking sector has a much rich compared to insurance, and bank assurance is taking ground in a very significant way. And we must also find aggregators, people who do other businesses, but then they can distribute for us insurance. That's the only way really that we can reach and penetrate. But partnership and more partnership is required from the government, from the regulators, from our development partners, and from our insurers.
Absolutely, Naomi. We are indeed in a race, and we have to tap into those untapped markets and align the products, as you were saying, to the needs, so that we can ensure that they do get engaged with all of these elements. And you raised an important question about government as well. So with that said, John, I would come to you and ask, so based on your experience, what policy recommendations would you provide to governments and stakeholders in Africa to strengthen sustainable finance and accelerate the progress towards the SDGs?
Yeah, I think I will put on my macro hat again. So I'm not really a sector specialist. I wanted to maybe to start by answering the question by linking 2 observations that Punki made about opportunities. Abundant resources, beautiful climate, a young population. And I agree fully with it. But as a macroeconomist, we also know that economics is about scarcity. And where there's scarcity, actually this is where economics flourish. Where there's abundance, it actually can put you in a trap. And so we are familiar when it comes to resources that we always speak either of the Dutch disease that can lead to overvalued currencies and make us less competitive. But even worse than the Dutch disease is the curse, the resource curse, that can trap us into corruption. And therefore, with these abundant resources that we have, we need to have frameworks in place. And one of the key things, I don't want to go to international frameworks, but I just want to speak basic principles. One basic principle is that when you have this resource, there must be trust. And how can that trust come? That trust can only come through transparency and through accountability. And that will enhance the trust levels. But if we don't know what is happening to our resources, where are they processed, what's happening to the proceeds, who are the beneficiaries, who are the owners, it will not work. Linked to that comes also the issue of planning. How do we plan? Do we plan from the top, or do we give meaning to the Agenda 2030? We've spoken about the Sustainable Development Goals, but I'm actually more inspired by the principles of the agenda. The principles of the agenda speaks to that it's a collective effort. We are all in. That's what differentiates the SDGs from the former agenda that we had, which was only meant for developing countries. But here we say we're in all of it. We are in it. But Africa has different needs than Europe. So when it fits Europe, then we're all in for it. When we need the subsidies, then it's a different story, and they can redeploy resources quickly. So there's also geopolitical issues at play. When we speak, Punki, of the demographics, so that's a very, very important thing. But and why is it important? Because other societies, they were able to reap what we call the demographic dividend. But the demographic dividend must be planned for. It will not just happen automatically. Just because we have young people, but we may have young people that will set themselves alight what happened in Tunisia. So we have to, if we want to reap the demographic dividend, we have to plan for it, and this is where policy comes in. I was just yesterday at an event where a census for Namibia has been launched, and within the census there's also a component on education. And on education there are 2 questions in a national census. And so the 2 questions is, number 1, can you read and write? Number 2, up to which year did you go to school? So based on those 2 questions, we will now conclude at the end of the census that Namibia has a literacy rate that's maybe 100%. But we haven't tested for the quality. We don't know what is the quality of education. How do we have to, we spoke about the capacity building, but the capacity building starts at a basic stage. It starts at early childhood development. In as much as we have a growing population, we must also prepare that population to be productive. And I think education policies are important. I'm so glad, like, if I look in, I think it's either Kenya or Botswana or both of them, they've already started to introduce coding. Because we are speaking of the 4th industrial revolution. But some countries are already thinking of the 5th industrial revolution, where we speak of artificial intelligence, of automation, of robotics. So these are all these things that should come into the policy space. But firstly, we have to look at a policy level, what is the role for government and what is the role for the private sector? When we over-regulate, and as much as we have all these frameworks, it can become very confusing. And we should guard against over-regulation. We should allow the private sector to flourish. We should make it easier to do business. But it's not only about when, for example, the World Bank speaks about the ease of doing business, they look at the ease of starting a business. So they will look at how many days will it take you to register a business, how much does it cost to register the business, but they don't look at the ease of keeping a business alive. How do you keep a business alive if you overtax businesses? Even before a business had started, you already slap a high tax rate on that business. So we need to look at our tax regime, and we need to see how can we actually unleash this potential of the private sector and really guard against over-regulation. Thank you.
Thank you so much, John, for that. So we have actually a few minutes for some questions from the audience. So if anybody has any question, please feel free to raise your hand. And I think there are some roaming microphones in the room. Okay, I see a question.
Thank you, and good morning once again. My name is Monday from Waikare. Now, my question is this. I've been listening to all the speakers. One common theme is that we need to collaborate. And in doing that, we have about 54 countries in Africa. And there's the Africa Free Trade Agreement. So are the insurance and the banking industry taking advantage of this agreement? Now, there are still several restrictions and barriers. Now, for instance, insurance is premised on the principles of large numbers. Now, the Africa Free Trade Zone will provide access to about 13 million Africans. So, how do we take advantage of this agreement to ensure that solutions that are developed in one area can be sold across the entire African continent? Thank you.
Thanks a lot for that question. I certainly agree with you that the Africa Trade Agreement provides lots of opportunities, in particular for the banking sector, and we see those opportunities also from our side. I think the most important thing is to ensure, that barriers to trade, an easy flow, I think, of capital, and trade is encouraged in the continent. To your point, I mean, we've got about 54 countries in the continent, but I can't think of one country that actually, trade, maybe two countries that trade between themselves using their own currency. To a greater extent, we still want to trade using the dollar, as a currency of trade. And at the end of the day, I mean, when you look at dollar trades, ultimately they become too expensive, I think, for the continent. And that's how we also import unnecessary inflation in the continent. So my sense is there are significant opportunities that we can exploit just by ensuring that we remove some of the barriers to trade within the continent. And I can tell you with a fair degree of comfort that, in our organization, these are some of the conversations that we have, and we try and we influence as best as we can in some of the engagements and interactions that we have, in particular with the public sector. Thanks. Hopefully that gives you some sense.
Sorry, can I maybe just add on to that? Maybe to just touch this on insurance when it comes to regulation that Doctor just mentioned when it comes to overregulation. So another aspect that insurance can look at is harmonizing regulation efforts on the continent, because you find in certain markets that certain lines of business are mandatory and in others are not, and you find that certain rates are harmonized and some are not. So we can have a discussion with regulators to harmonize efforts to ease the burden of trading in on different markets. Thank you.
Nuran, allow me also to build onto that. One of the challenges we've found as ICEA Lion, because we operate in Kenya, Uganda, and Tanzania, is that despite the fact that we're in the same block, the regulations are very different, and therefore I support Cecilia when she says that there's need for that harmonization. But for me, I see the bigger picture is the political will. Every country wants to stand on its own. If we have an IT system where data is stored in Kenya and it's serving Uganda and Tanzania, from a regulatory perspective, that becomes a huge problem. So we must have a server in Uganda and have a server in Tanzania and a server in Kenya. Therefore, it's actually not helping. When you look at the rest of the world, they don't care where their servers are. They could be in Africa or someplace. It doesn't matter. I think that's why ICEA Lion, we were very keen to be part of this sustainable agenda, and that's how we sponsored the Nairobi Declaration. And we are so glad that we now have 120 companies that are part of the Nairobi Declaration. And we will have sessions tomorrow to discuss how can insurance companies in Africa come together outside of regulation, because at times, if we were to wait for regulation to be changed, we will never get there. At most of the times, the industry is ahead of regulation. So we must find a way of working outside of that regulation. Nothing stops a company in Namibia to borrow what ICEA is doing in Kenya. There's no law. You just get that and customize it to your local environment. When I look at our reinsurers, they cut across Africa. Waikari is West African based, but it's in Kenya. So I know Namibia is here, but there's a few companies in Kenya. So I think it's very important for us to go above the law and start looking at other alliances where we work together as entities, and like my CEO yesterday said, borrow with pride.
Thank you. I just want maybe to underscore two messages. The one of harmonization, it's critical. If you come, I'm not so familiar with financial transactions, but if you take cross-border trade, customs harmonization, single entry points, those are critical to facilitate the movement of goods. If I have to stop at so many customs points, if I move a product from, say, Egypt to Cape Town, unless if I fly it, if I drive, it's a nightmare, and it's costly. So we have to harmonize, and that will give meaning to the Africa Continental Free Trade Agreement. The issue of the currency is equally important. If you look in the case of where in South Africa and Namibia, Botswana, Eswatini, sorry, not Botswana, Eswatini and Lesotho, they have a common currency arrangement. It makes it much easier to do business. And on top of that, also a customs union that's quite deep. But even within the customs union, it was only now recently that between Namibia and South Africa, we just had one single entry point where goods were cleared. But one thing that we have to look at future, what bring people together, what facilitate trade and business are actually people. And when it's difficult for people to connect and to meet and to move, it's going to be a huge setback for us. I'm so glad that Namibia and Botswana has decided just to use identification cards to travel. And we have spoken of an Africa Union passport. I think it's only the ministers of international relations and the heads of states that have ever received that passport. But it's difficult. You know, we must do away with visas and let us connect. That will give meaning to the implementation of an Africa Free Trade Continental Agreement.
Perfect. Joachim here from Bank Windhoek. I have a question for Punki. You mentioned that Absa has made a pledge to finance sustainability up to $1 billion, I believe. I'm not sure if you already mentioned what I'm going to ask, but so is this Absa deliberately making steps, creating innovative financing products to finance sustainability, or is it just to finance what the current economic times type of projects allow, like as in your mitigation projects? Or is it venturing into adaptation and all these other projects within sustainability?
Yeah, thanks a lot, Malcolm. I think that's a great question. So just to be clear, we've put out a target for 100 billion And this 100 billion is more in renewable financing. But I think when you look at our sustainability strategy, we're quite clear that the social dimension for us as an organization takes priority because we are clear that the transition that we are on needs to be one that's just and also at the same time that is equitable and supports growth to a greater extent here in the continent. And I think we are very unapologetic about that. We've had lots of pushback, in particular from environmentalist groups, but we are quite clear that we are not going to not take care of the continent of Africa, because for us it is that important. So if your initiative that you want to run is an initiative that is clear in terms of how it's going to support job creation, as an example, in all likelihood, you will get financing from an Absa point of view, even if it's not, a renewable funding project. So there's a number of initiatives also that we are running with the agricultural sector, in particular from an adaptation point of view, because we are quite clear of the fact that whilst renewable energy and some of the funding that we are advancing is largely for mitigation, from an adaptation point of view, the environment is busy adapting, and food security is important. So from an Absa perspective, we are working with a number of farmers across the continent to ensure that they can adapt appropriately. About 2 weeks or so ago, we also took a group of farmers from South Africa to Israel to go and have a look at some of the innovation that is taking place in Israel, with a view to trying to ensure that they have access to some of the innovations that are taking place globally. Thanks.
Thank you so much, Punki, for that. And thanks to all the speakers, John, Punki, Naomi, and Sesilia. It's been very interesting, and thanks to everyone for your attentiveness and engagement with us on this panel. With this, we close the panel. We've had some interesting discussions, and we see that the common factor still continues to be collaboration and partnerships, and looking forward to see how that continues for the rest of the day. Thank you so much.